I want to stick on this China story because, of course, it is our biggest story this morning. In the latest battle of the ongoing trade war, the world's second biggest economy will hike tariffs on $60 billion worth of U.S. imports. That begins on June 1st. The goods targeted include a broad range of agricultural products. And, of course, this move is seen as a response to the Trump administration's moves last week. The U.S. raised the rate of tariffs on $200 billion worth of Chinese imports and did announce that further tariffs on another $300 billion of goods are on the way. Tom Essaye, the founder and president of market analysis newsletter Seven's Report, joins us now, and Yahoo Finance's political columnist Rick Newman also joins us for the conversation. Thank you to you both. Tom, I want to start with you. Morgan Stanley out with a note today saying that tariffs could likely lead to an economic recession. As you think about this market's news and as you've been following the story over the last couple of months, do you feel like we are in that dire situation right now?
I don't think so. I think could likely is, that's kind of a little bit aggressive. I mean, at the end of the day, we're still, 25% on 200 billion is a lot, but I don't think that's enough to totally reverse the U.S. growth. I think the bigger risk to U.S. growth, though, is that global growth gets so worse from this that it basically acts like an anchor on our economy. That's what we should really be nervous about.
Yeah, as you think about the forecast over the last couple of weeks, you write this daily newsletter. How have investors and your clients been reaching out to you as you see their escalating worries or their concerns? Or do you feel like, for the most part, it's been a pretty consistent theme?
Today, definitely the mood has changed. I think that last week people were under the impression that the tariff threat was kind of just a bargaining chip and that we were still eventually going to get a deal, and this really wasn't going to be that much of a problem for the market. The biggest issue out of Friday's talks, and the reason the market is down 500 points, is because nobody knows what's going to happen next. There's no date set where they're going to have another conversation. And now all of a sudden, the market priced in a trade deal. At 2850 and 2900 in the S&P 500, a trade deal was priced in. Now it's very uncertain. There's definitely some anxiety right now.
Tom, there's uncertainty in the market, but there still seems to be the thinking among investors that there's going to be some kind of deal at some point, even though there's question marks about the timeline. Is it time to start kind of shifting the thinking of that this is a prolonged decoupling, if you will, of U.S. and China trade, that this isn't just about moving towards a deal, but an increasing fragmentation between these two countries?
Well, I think that's definitely the worry, and your political commentator will be able to speak more to this. But I think one of the core issues is that people think Trump's calculus may have changed, where he thought he needed a trade deal to help boost the U.S. economy coming into the beginning of the year. Now the economy is still doing well. And I think that taking a hard line with China is playing well with his base. I'm not a political expert, but that's definitely a valid point that people are making. And it's something markets had not figured before. Eventually, there will be a trade deal, but the worry is how much damage do we have to do before we get there?
Tom, do you feel like Trump misled markets to some extent? I mean, he's the one who kept sort of talking up the likelihood of a deal and saying productive talks and things are on the right track and stuff like that. So did he mislead markets?
No, I don't think so, because if what we're reading is correct, that everybody thought they had a deal until 2 Fridays ago, when there was a cable received back with a whole bunch of changes to the deal that they thought was in place. So I don't think they misled markets on purpose. I think that sometimes when it comes down to actually signing paperwork, people get a little bit nervous, and I think that this is just what happens. I mean, look, these are two enormous economies. These are very, very serious issues. And it's really not shocking that they can't find agreement because their interests are pretty opposed right now.
Yeah, Tom, back to your bread and butter. In addition to trade talks, of course, when you think about what else you're monitoring this week, earnings season is still in effect. So Macy's, Cisco, NVIDIA, all of these companies are coming out with their reports this week. What are you looking for? And do you feel like even in light of good news, perhaps because of the current market tenor, we can see continued sell-off there?
Yeah, I mean, the trade thing is just an enormous overhang now, and it's just the unpredictable nature of it. I mean, again, 3 years ago, I don't think any of us would have thought we'd be glued to Twitter trying to see what's moving the market with trade policy, but that's the world we're in. With regard to earnings, they were definitely better than expected, but they weren't good enough that they'll be able to offset all these trade concerns because, as always, the market will look forward. They'll say, okay, fine, Q1 was good, but now with these additional tariffs, what does that mean for Q2, Q3, and Q4, and will we start to see numbers come down? Hopefully we get some good numbers this week from Walmart, NVIDIA, and that'll help kind of solidify sentiment a little bit. But the trade issue is just so uncertain right now. It's a major overhang.
And Tom, as you look at the fundamentals in the market right now, where do you foresee the bottom happening? Do you feel like we're nearing it at all?
Unless things get materially worse, I don't think that this is going to start an October type of sell-off or correction. I think that the market was priced for relative perfection. I think that has now changed. Could we see 2,800, maybe a 2,700 print in the S&P 500? Sure we could, because the way the market works now, the volatility on both sides swings further than most people think is reasonable. I do not think where we stand now with trade, however, is the end of this 2019 rally.
Thanks so much for your insights, Tom.
Thank you.